Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today we have Dr. Barbara Kolm and Ira Harris. Barbara is president of the Friedrich von Hayek Institute in Vienna, Austria, founding director of the Austrian Economic Center, and vice president of the Österreichische National Bank, the Austrian Central Bank. A worldwide networker, she is renowned for promoting free market policies. She's a frequent speaker on public policy-related issues, especially on deregulation and competition, the future of Europe, and Austrian economics, and also a professor at a university in Montenegro. And Ira is independent trader, hedge fund manager, and global macro consultant, trading foreign currencies, equities, bonds, and commodities for over 40 years. He was also CME director from 1997 to 2003, and a stint most recently. Welcome, Barbara and Ira.
Thank you.
Thank you very much for the invitation, Richard.
Great. I thought we'd begin with a discussion on your thoughts on the global economy and markets, in particular on Europe. Barbara?
Well, thank you, Ira. Great question. These days, it's a little bit difficult, and with all the geopolitical shifts and tensions we see, the economic damage caused by the Russian invasion will slow down global economic growth in 2022, and it will also sharply increase inflation, mainly through fuel and food prices. And meanwhile, many countries are tightening their monetary and fiscal policies. So we have data from OECD saying that the war will reduce global economic growth by around 1 percentage point this year globally. And IMF projections expect global growth to slow down from 6.1 in 2021 to 3.6% in 2022. So the IMF forecasts forecast annual inflation in the industrialized countries at 5.7% average. So the pandemic really has given us a hard time, and now because of the lockdowns, and the pandemic is not over. If we look at what is happening in China, so this will be a constant continuation. So the economic consequences of that are definitely very, very bad. And the war in Ukraine imposed by the Russians definitely doesn't help either. So in the euro area altogether, this doesn't look too good. If you want me to go into detail, we can do that for sure. Just let me know if that's too general or too.
Yeah. I mean, do you see lots of challenges with the financial situation in Europe, especially stemming from the European bond market and the repurchase agreement overnight lending market?
Oh yes, this will definitely have issues and have consequences for the bond markets. So the outlook for the emerging markets, especially, is very. I put it mildly, is less favorable, because tighter external financial conditions on the back of the U.S. monetary policy normalization and the heightened geopolitical uncertainty will or are most likely to increase the downside risks for those portfolio flows. And on the other hand, emerging and developing markets are facing devaluations, tighter financial conditions, and higher risks of capital outflows since the war in the Ukraine began. So all these things are definitely have results, and the number of issuers trading at a distressed levels has surged to nearly 25% of issuers, surpassing pandemic peak levels. The deterioration in spreads combined with the increase in US yields has pushed financing costs well above the pre-pandemic levels for many emerging market economies that have seen their gross external debt positions increasing along with persistent current account deficits. So it is not an easy situation for the CE countries.
Interesting. And your thoughts, Ira?
No, I'm very interested to hear that, and especially when we talk about the emerging markets. So, I mean, the ECB will frequently talk about the value of the currency as being important in their decision making, whereas we never hear from the Fed. The Fed will tell you that it's not their place, that it's the U.S. Treasury, but the rise in the dollar since the beginning of the year, probably not necessarily against the euro, but certainly against by the dollar index, dollar is probably up around 13%. So do you see that as playing into creating even a tightening of financial conditions, which leads by Powell's words yesterday? He talks about tightening of financial conditions, and in the short term, they may see it as a positive because it will. They're targeting headline inflation. The Fed is targeting headline inflation. I think there's no doubt about that, because the White House, it's a political statement. They want headline. The Democrats will really suffer if inflation headlines stay buoyed. But will the dollar, especially if it goes higher, do you think? And I'm not, if this is sensitive to the ECB, I don't know that it would be, but we won't go that route. But I think that the dollar does have a dramatic role to play here for the rest of the world, only because you're an Austrian school. So we look at debt, I think, first, because cycles are built on debt, and the amount of debt that has been created, not just for Europe, and not for just by the ECB policy, and not just for the United States, but because the United States is a reserve currency, there's a huge amount of debt dollar denominated. So
indeed, I mean, we have seen the build up of debt ever since the so-called financial crisis hit Europe, 2007, 2008. And then when we started with the European Stability Mechanism and all other kinds of tools, we allowed leaving the Maastricht criteria totally. We have actually done so at the beginning of the 2000s already, but debt has been built up tremendously. And the problem I see these days is that monetary policy is not separated and not strictly kept independent from fiscal policy. So things are thrown in one basket, and that's, I think, a very negative situation. But you're totally right. In situations like that, the dollar is definitely seen as kind of a safe haven, or you will also see, or might see, capital flows to the U.S. This is what the U.S. wishes and wants. But there are also alternatives, because, of course, the U.S. is as a reserve currency, as you mentioned before, and it might happen that the euro will devaluate a little bit more, but not permanent. It's an up and down cycle. But the problem is we are in war right now. Europe is in war, and that's kind of an issue for some, I would say, assets that might withdraw from the European markets. And that's probably something that will have consequences.
But with the global debt load, especially denominated in dollars, as the dollar goes up, that load becomes much more serious. And I think it's a lot of it. They talk about the Japanese dollar swaps, and that can't be good for Europe either. By the way, the fact that it's the yen. Right? The euro yen is a critical element, especially for the German high-end
exporters.
Yes, high-end exporters that compete directly with Japanese corporations. So this is
that is totally correct, and that's why we are in a very difficult situation these days. So it's the financial and economic challenges for us in Europe are really definitely there. And this is why I mentioned before that it's truly important to keep monetary policy independent from fiscal policy. And this is what I do not see these days.
Interesting. And how do you apply, or in what ways do you apply the Austrian school of economics, the principle of that school of thought into policies like for the European Central Bank?
Here we come back to what we discussed at the very beginning. In the Austrian school, and especially Karl Menger, when he wrote the Principles of Economics, which was more than 150 years ago, he definitely pointed out the importance of money and credit and savings and those things that the Austrian school has embraced. And then the next generation is, or the second next generation is probably Hayek and Mises, who have started with the boom and bust cycles, who have explained them, why booms happen, why busts are the consequence of that. So this is all Austrian school, but let me take one step back. In 1907, Karl Menger debated a certain professor from Germany, Professor Knapp, and he was in favor of what we would call these days modern monetary theory. And Menger pulled him apart and by saying, this is neither modern nor monetary nor theory, because you can't expect the state and the government to print money and to set the price for money, meaning the interest. And I think this is something where the Austrian school has been very instrumental in many thoughts, or many economists' thoughts, but also in central bankers' thoughts. So the importance of a favorable investment climate has always been stressed by the Austrian economists. And this is an imperative given the challenges we have these days. And again, the war has highlighted the need to strengthen the strategic autonomy without forsaking the benefits of globalization. So together with the green transition that, the ECB is also looking at and going through, this implies enormous investment needs. And, you can only have investment needs if you have a favorable and attractive role for investors to bring their capital in. So this is what the Austrian school has always worked on and has promoted. And I see this is definitely something that we want to go into.
Interesting. And your thoughts, Sarah?
Where am I going from? I mean, I was not always in this school, but I used to sit and argue, not argue. It was a great discussion every night when I was in graduate school, because there was one of the people I was in graduate school with was doing his dissertation on Hayek's Constitution of Liberty. Everybody claims to have read The Road to Serfdom, and
not to slavedom.
Huh?
Not to slavedom, to serfdom.
Yeah. So. Not to slavery, but to serfdom. But to me, the Austrian school is so, and reading Schumpeter, who I adore, amongst others, but certainly Schumpeter. And when you look at the amount of debt that plays into the boom-bust cycles and understanding the debt, so you come at it two ways. Do you prevent the debt from building up to becoming that type of dramatic overhang, and which really ties you up in knots, or do you allow the inflation to erode the power of that debt? And you know what? And that's what the contemporary people think about, because Rogoff gets a free pass. But if you go back to Rogoff's book that made everybody they couldn't talk about it enough, and I'm sure very few read it. This Time Is Different, that he wrote with Carmen Reinhardt, who I have great respect for. Carmen Reinhardt. Her work on financial repression is outstanding after World War II and making us understand it. Now she's in a different role. I understand that. So, but Rogoff's main belief was that we should run inflation of 4 to 6% for X amount of years to alleviate the debt load that had been built up, especially from the bailout of Wall Street after the great financial crisis, and why this was going to be different. So you can't be surprised by this. And that's their solution. They would love, and it's the same solution of the modern monetary theory. Yeah, except that they depend on a responsible electorate to of course vote for people who are going to raise taxes to stem the inflation that may come after the fact. But I think these are very important things. And now we're going to get to the issue of debt. And in Europe, that debt load takes on a lot of other things, because we got the target 2 balances that become significant, especially who's on the hook for those balances. I mean, if I was an Italian, I would not have an account in Italy. My euros would be on deposit in Germany or Austria or the Dutch, who always skate through, from 1650 onward. So we know that they're very adept. But my balances would not be in Spain, France, sorry, SocGen, but or I would have those balances in other European banks.
Ira, you made a couple of very important points that I would like to reflect on a little bit. First of all, the Austrian school has always looked at debt from a different way, because we have always said you have to pay it back from a very responsible point of view. You can't inflate it away. You have to stick to principles, and meaning sticking to principles means also the use of sound money. And there we have an issue when you might not want to have your euros in an Italian bank, but you also have an issue having them in an Austrian bank or a German bank, because we have negative interest rates these days. So that's the point. And there we come back to solid monetary policy, where we say, we need to look at the interest rates and get the first steps coming, the raising interests at least 0.25, the first one, and then the second hike in hopefully Q3 and another one in Q4. So this would be something that would definitely help and give a signal to the markets with regards to the inflation, the amount of inflation, level of inflation that we have these days. Having said that, also from an Austrian perspective, of course.
Yeah.
Austrian schools perspective, put it this way.
That I understand. And it was really the 70s. So I was very fortunate. Richard hosted, we did a talk 3 weeks ago with Zoltan Pozar, and I'm very fond of Zoltan. I was before that, but most of the time when he wrote for years, people's eyes would glass over, because all he did was want to talk about the plumbing of the short-term interest rate market. Now he's much more, he garners a lot of attention because of the global macro views that he puts forth. So I really enjoyed that. But as we're talking about, if you go back to the 70s, and this is real, I was lucky to have, I had Marxist professors of economics who taught the Austrian school, because once we had the great inflation developing, due, of course, with the, you're too young to remember, but I'm not, and we were discussing what happened with OPEC and the raise of oil prices
in the 70s.
Yes, and it was actually, the Austrians.
The best that was foreseen by the Austrian school.
Exactly.
Hayek and Mises, they predicted it. They predicted all the busts.
Exactly. And by 1978, I was totally convinced they had it right. In fact, when I interviewed with some banks, and I said, your quote unquote third world loans, we don't call them third world anymore, they're in emerging markets, those are going to be disastrous. And they said, what are you talking about? Those are the best lending we're doing. And it was the Austrians who understood that it was the recycling, and this is where Zoltan was talking about, of those petrodollars, because who were you lending them to? The most non-worthy credit borrowers. You had those third world countries who had to import high energy, high food costs, especially after the Russian wheat deal. So here we are,
Yeah.
50 years redoing the whole thing. And there's no way they could ever repay it. They were just borrowing to sustain themselves and prevent some type of political calamity. And so eventually, when they couldn't pay it back anymore, you had to restructure that entire. So of course we get the what is that, the Club of Paris, and we get all that restructuring. So it was the Austrians who saw, and the Marxists, which is really kind of interesting, because the Marxists were kind of, they loved that, and they were hoping that the currency would just be debased and would all float away. So they had different perspectives, where the Austrians, being sound money people, were going, oh no, you got to repay this debt.
And believing in property rights, and this is something that that we must not forget, because this is truly important, especially with a generation where young kids don't Fridays for Future, they don't care, they think they have invented the truth, and without asking and looking at the right facts and figures. And I think there we have to really take a step back. And since you mentioned the 70s, I think we have not learned from the 70s with regards to energy crisis and to the oil prices and the consequences thereof. And I think it's overdue that central banks look into that and learn, take the learnings from that.
Well, yeah, and yeah, so you bring up a good point. I was having this discussion early this morning. I'm in Arizona, so my day starts at about 4 o'clock in the morning. And I was having a discussion with a dear friend of mine who's a wonderful gold analyst. And we were talking about when Nixon went off the gold exchange standard, not the gold standard, but the gold exchange standard, as Jacques Rueff and others so claimed it. And they were, and I think, exactly right. And Volcker actually advised him. And that's what we were talking about. But by 1980, like the ECB in the FT article last week, where they did a mea culpa for apologizing how they got the inflation for it. I thought that was an interesting article. We don't get that from the Fed. We don't get mea culpas. But it was interesting because they all talk about Powell needs to find his inner Volcker. In fact, that was Zoltan's first piece that garnered a lot of attention before he wrote about the petrodollar. And he says, because he was frustrated, I asked him about it. So he was frustrated. But if you find your inner Volcker, and this goes right to you, the amount of debt that Volcker encountered when he set on that path to destroy inflation was nowhere near. Right now, we are saddled with so much debt that there's no way the Fed could find their inner Volcker without bringing the world into a depression.
Yeah, it's all interlapping, and that's why we have to be very careful and look at it from various angles. There is no one size fits all solution, but there is one solution that we can definitely say, especially as Austrian economists, that structural reforms need to be done in our over-indebted economies in order to save again, or actually to at least get our budgets more or less balanced again. Debt breaks that have been working, for example, in Switzerland or in Germany in various ways would definitely be something that would help, apart from structural reforms in a pension system or in the social security system, etc. But those things definitely need to be undergone.
Well, but I believe that Germany did, even under Schweibel, did suspend the Schwarznow, where they were forced into that zero. But I think that's been suspended.
Yeah, well, right now they have suspended it, but in Bavaria, for example, they will have it back, and in many other states in Germany as well. So, I mean, it's suspended right now because this time is kind of, extraordinary given the COVID shocks, the lockdown shocks, and the Ukrainian crisis. The war in there is definitely something that is asking for different measures, but are not asking. Yeah, well, yes, I'll put it this way. But they will have to go back to normal and solid policies again, sooner or later.
And speaking of structural reforms, do you have positive suggestions in that regard for addressing some of the debt challenges in Europe, and also inflation and energy food challenges for Europe?
That's a big question. Yes, I mean, from an Austrian perspective, I would say, well, homework. This is what I've already mentioned with regards to the states, but also in the Euro system, but also with other central banks worldwide. They have been instrumental in cushioning the shock to confidence, the aggregate demand from the pandemic. So global supply constraints, as we see these days, and in particular fears about energy shortages in Europe, absolutely, they have led to energy prices that are soaring globally. And at the beginning, this rise of energy was definitely artificial, because we saw the first consequences, or the first hints of inflation already more than 1 year ago. And this was kind of also a consequence, delayed effect of the lockdowns. But we see on the one hand the price increases because of the production chains on the one hand, for the intermediate goods, and also the commodities, but also the food and consumer goods. And so, as again, monetary policy affects aggregate demand, and this is, which means, put it bluntly, a supply shock cannot be solved with monetary policy. And this is global trade policy that also needs to be addressed. And there we are lagging behind. But monetary policy, and this is what I say as a central banker, is something that can provide trust. And trust has allowed that the inflation did not kick in as soon as it would have if the central banks had not reacted at the very beginning. So this is I think something that was a very positive effect. And the second thing, with regards to the energy and food challenges in Europe, I mean, the Ukraine has been always the corn chamber of Europe for centuries, and also lots of wheat has been exported from Russia. But having said that, the consequences of the lack of those agricultural products now will hit countries in the sub-Saharan Africa, will hit Egypt, and this will have other consequences again, not only for Europe and migration, but also, of course, for the markets, for the financial markets. And that's something where we need to look into what are these ultimate consequences for our nation states. Mm-hmm. And of course, the prices have gone up in energy as well, and alternatives have not been found. And here is where, Schumpeter, since you were quoting Schumpeter before, we all signed into the new Green Deal, which is definitely important to do so and to find new solutions. But we have been lagging behind with the innovation part. It takes a while until innovative and energy systems and supply systems are working, are at the end where they have arrived at the consumer. We are still in the planning mode. We are still in the testing mode. So the results will take a while until we can feel them. and that's it. That's something where we are lagging behind, and that will definitely, but that has not been priced into the entire system. So here we have to wait until and be a little bit patient. The entire thing, the entire sustainable issue and green issue is too important to just say no, we throw it overboard now because of the lockdown crisis and the war. It's just delayed. It will be delayed, but we will have to go through that, and we'll have to allow companies to invest, and also allow them to take the time to find the right solutions, and then have multiple solutions, and not just electric cars. There's plenty of alternatives. And for example, Austria, we have our wonderful mountains and our rivers, and there would be lots of opportunities to allow to produce energy via hydro. And we have not done so because of the regulations that were in place. And those things need to be changed and adapted to what we need. We definitely lost time there. Sorry for being too long on that.
No,
but it's dear to my heart.
Go ahead, Ira. Yeah. Your thoughts, Ira?
So in promoting alternative energies, which certainly, and I believe that Schumpeter would be a big proponent. Now, the role of government, that would be debatable, but if you fuel it, and look, it's anybody in the United States, you understand that funding NASA and the Defense Department in the 50s and 60s allowed phenomenal externalities to develop. So there was great advantages for society, and and it was the society that paid for it because we were taxed as American citizens. But NASA and the promotion of so much new technology, which I think that's what you're speaking to, which then does give the ECB especially a role. And I know that Isabel Schnabel has talked about it,
yes,
right? I'm sorry for
Schnabel.
Yeah, has talked about the role of the ECB purchasing, green-oriented bonds. There's certainly a lot of bonds for them to roll off that they can replace with that would be much more in line with that. And I think that there are some I think there are European corporations. I see ABB, which I'm a big fan of, and I own the stock, and I think that they have a huge role to play going forward here, because I think they understand carbon sequestration and how to promote it. And they've built enough coal power plants in their lives, and are now on to where this is going to go, and building out the infrastructure to support electric cars. And you have to build out a grid because you're going to, and they're going to have to figure out where this is going to come from. Besides, and I think that that's my opinion, Merkel. But I believed that she made a gigantic mistake after Fukushima anyway.
Yes,
but I didn't understand the politics of. But we'd have to get to Gerhard Schroeder, and that's a whole different discussion as to who played what role in this.
Yes, but Schröder, remember, did the right reforms that allowed Mrs. Merkel to be a big spender. If Gerhard Schröder had not undergone Hartz reforms and the structural reforms, then Germany would definitely be in a different position. But coming to your point with regards to Isabel Schnabel, in July last year, the ECB just adopted its action plan to include climate change considerations in the monetary policy strategy. And this affects also and this is interesting, the macroeconomic modeling. It affects statistics, it affects disclosure, it affects risk assessment, and also the collateral framework and the entire corporate sector asset purchases. So we have to look into that once a central bank is adopting action plans with regard to the Green Deal. It's and it's a long transition to get from brown bonds to green bonds.
Yeah, no, it is. And, people can argue the science, it doesn't matter. It's almost like the great mathematician Pascal, who said, what difference, when people would ask him, you're such a rationalist, and how can you believe in God? He said, well, what have I lost by living a better life? And that's kind of the way I look at it. So if I put solar panels up on my roof to get a much better use of, and battery storage. I mean, there's so many steps to this, but so if the science isn't right, what have I lost? Did I read maybe a little better life?
Well, I believe in diversification and in many opportunities, and making not putting everything into one pot, but making the options or opportunities by diversifying, especially on this energy issue, and not to depend on solely one thing. And
you touched on something that we've touched on in other. Now, of course, now this is my first podcast with you, and I'm grateful for it. But I have for many years raised the issue of Gerhard Schröder, and the fact that he went right from the chancellorship to Russia. I mean, and as you rightfully say, and I've made that point, because Hartz IV was a great success.
Yes.
And he knew that it was going to be a great success, but he called that early election. This always sticks out. I never understood, because he didn't have to call that election until 2007, and he called it in 2005, which the full beneficial effect of Hartz hadn't really taken place yet. So he loses the election and heads over to Russia. I mean, he didn't right away. So,
well, I think he would have lost the election anyhow, because he knew that this was totally unpopular and that he will not be reelected. Because after all, I think we are all fans of Jim Buchanan with his public choice theory, and Schröder did not give gifts. He actually took something from the voter, and this is a totally honest but different approach, and I think they punished him for that as well. And I think he knew from the very beginning, once he did those reforms, he would do a great thing for his country, but for Germany, but he will not be reelected.
Good.
I think he knew that.
I'm glad to have that view, because I've always been that had he waited 2 more years, they may have seen him in a better light. But I certainly defer to and it's a good point. Now all of a sudden people have discovered exactly that he has a role in Russia. It took the New York Times probably 17 years to figure that out, but yeah. It hasn't come free, but it's we're in that situation. So, but natural gas was going to be the stepchild, the step ladder for this until and turning off those. I understand. I understand the power of the green lobby in Germany. Does Austria have nuclear power plants?
No, we have one nuclear power plant, which is a museum, which has never been put into production because Kreisky called for a public referendum. Yeah, he called out for a referendum. The famous Chancellor Bruno Kreisky in the 70s, the Social Democrat, and this was he lost it. So we had a ready to go nuclear power plant in Zwentendorf, close to Vienna, and people were demonstrating on the streets and rallying against it, and he lost this popular vote, and so we never put this into work. So we have a museum of a nuclear power plant, but we're surrounded by nuclear power plants from Czech, Slovenia, Slovakia, everywhere. We're surrounded by them.
Yeah.
Interesting. And just your final thoughts Barbara, on like the future of Europe, the economy and financial system in Europe? Your final thoughts?
Well, the future of Europe is not as rosy and gloomy as I wish it were. We have a couple of challenges ahead. First challenge is the debt levels that we already touched upon, that we need to get rid of, where we need to do our structural reforms, but those reforms need to be done in the respective states, in the countries. Having said that, I believe in competition, and I believe that Europe has always been most successful when economic entities were larger than political ones, which means when regions or states were competing for not only money for investment, but they were also competing for the best brains and for individuals. And by that, we just outmaneuver others. So competition is a cornerstone, a key element, and we have a little bit abandoned competition and have gone to the one-size-fits-all policies and have overregulated our economies. So I would rather say competition helps us or would help us go back on track. This is the second point. And the third point is, of course, that we will have to rethink Brussels or the European Union. The way it functions now is definitely not the optimal one. We have gone a long way from our 4 European freedoms. The freedom of to move, the freedom of service, goods and transport, money flows, etc. Those have actually been abandoned, and the COVID crisis has made this transparent. We were unable to move. The Schengen was not existing anymore. Borders were closed. Goods were not transported from A to B, etc. So all those things actually should set us thinking that we need to rethink Europe and press a button and say, hey, there was a reason why Britain left the EU. Have we learned from that? Can we do better? And I think we can, for sure. And we also need to go back to our principles, namely competition, achievement principle, and also responsibility. And that would make Europe better and more successful. And on the central bank side, I would say sound money is definitely a must, meaning, and this has already been done, so the asset purchasing programs and the PEP programs PEP is running out. APP is, as of April, we had 60 billion. In May, it will be 40 billion, May will be 30, and then close to 20. And so this is running out, and which means the next logic step would be raising the interest rates.
Well, great thoughts. And your final thoughts, Ira, also?
No, I'm between Teltro and 1, 2, and 3, and everything else comes in. They're going to have the same problem. They're going to have a different way because they have how many, 25 entities who are members of the European Central Bank, and they're all saddled with different things. It's almost like if each state came to the Fed and had their own debt that they were, I wouldn't want that position. I understand, July of 2012, no taboos, and we'll do whatever it takes. But whatever it takes, as again, Milton Friedman would say, and he's no Austrian, but he would say there's no free lunch. So how are they going to absorb? It's going to be very interesting. And I just hope that, as they say, the Hanseatic Five, who are much more hawkish in their views, and they exist. I watch Lagarde's press conferences, and you can see the stress since December. It has not, she's tried to sell that it's unified, but you can tell how she comes out. She has been under a lot of
Pressure.
a lot of pressure, and I don't relish it. And I think that she was appointed because she has the political acumen, because it's as much political acumen. It's no longer the economic acumen. This is and she has the experience of being an international lawyer and her IMF directorship. So because I thought it was kind of a bad decision. Then a month later, I said, this is actually a pretty good decision, because this is going to be a political battle. And it's going to take somebody who has the political acumen to be able to get through this. Because as I talked about with Thorsten the other day, it's now too big. When Germany and the Alternative for Deutschland would talk about pulling out and whose euro is it, and the Germans will go back to the Deutschmark and leave everybody else with the euro. We've gone way beyond that.
Yes.
And a lot of it is because of the pileup of debt. Because if you were to do that today, the global economy would come falling down upon itself. That's because the debt levels, which would, what is, Lagarde made that famous mistake in her first meeting when she says, well, our job isn't to keep credit spreads in line. And she walked that back, and we've talked about,
it's about financial market stability. It's about price stability.
Right.
And this is exactly the task of the central bank. And this is why I also stressed that it has to be independent. And, if you are not independent, you can't get it done. And this is why we have to keep fiscal policy separate. And these are the key principles for central bankers.
Yeah, and the fragmentation of the EU debt markets is a very serious overhang that has to be dealt with, because the markets will deliver that blow, and then the politics become fragile. Does Germany and France get at each other? And then you have Italy, who I think they were very smart putting Draghi
in position.
I'm not a big Draghi fan. But he knows where all the skeletons are. So it's kind of hard not to give Italy what Italy desires. So how this finishes out, I don't know, but I hope to come back and discuss more, because this was really delightful. I appreciate it.
Well, thank you very much. It was a pleasure.
Yeah, same here.
Yeah, thank you so much, Barbara and Ira. Thank you.
The FRA Roundtable Insight Show is for informational and educational purposes only, and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors, which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.